Hello traders, welcome back to my channel. In this video we'll be doing a midweek review on the trades that we took and the analysis that we did on some currency pairs and gold. And it's noted that we have had more than, let me say, a 90% above win rate because most of the trades that we took, they have hit target, right? So we are going to be doing another review and a top-down analysis showing how to also take trades based on chart patterns. This is a very high risk to reward ratio winning trades opportunity, which you can use in any market you are trading. So even you are trading the indices market, whatever. All right, so you want to watch to the end if you want to learn how to catch trade opportunities like this, predominantly using maybe the chart patterns, trend continuation and all of that. So this is very important and you want to watch to the end. Okay traders, welcome to my channel. I am Full Kingsley. By the grace of God, I bring to you guys strategies, tutorials on the forex market, volatility indices, metals like gold, Nasdaq, VIX75, many other instruments. You want to subscribe to the channel by hitting on the subscribe button and notification bell to not miss out. Right, so now let me just start by doing a demonstration. Right, these are some of the trades that we took, like I said earlier, and we have been analyzing, doing a trend following. So these are some of the trades we dropped even in the very well. This is the VIP channel. These are some of the signals that we gave, guys. So let me say in 3 of the signals that we gave, we won. In fact, 4. This is GPU, right? This is GPU. We have US dollar, Japanese yen. We have US dollar, Swiss franc. Look at them, all of them, they move just as predicted. So in turn you can even say a 100% win rate, because let's say for the trades that we took, okay, it was like, let's just say 90 something percent win rate, right? But however, this is based on a trend continuation and a trend following entry. All right, so if you also want to join our Telegram channels, I'm going to drop the link in this pin comment below. Just go down to the pin comment. You are going to see a link to that, right? So before that, let me just do a demonstration now. This was based on a top-down analysis that we made, and for those people who watched my videos, who followed up my videos last week, should know exactly this is how we did. We actually analyzed this and we actually explained that because this price was in a downtrending market, we went to the H4 time frame, we looked at swings, and we saw price consolidation. So we saw this breakout, and at the beginning and the open of the market, we were expecting that price should drop, and that's what happened. Now let me do a demonstration and simply show you guys how simple this is. Okay, now what we do is we simply go to the bigger time frames, right? If you go to the H4 time frame, we look at the general trend of the market. So if we see, like for this market structure, you see price creating lower lows and lower highs in the H4 time frame, that is, we already know that we have a downtrending market, right? That is clear, but we are not entering based on the H4 time frame, except we want to take a swing trade. So now what we do, now we drop further, maybe to smaller time frame like the H1 time frame. Like this is the H4 time frame. You can see price getting higher highs and higher lows, right? Or let me say lower lows and lower highs. You see this, right? So each time price consolidates, it drops, it consolidates, it drops. Okay, now what we do is we wait for price to create the impulsive move, right? So when price creates an impulsive move, that's how predominantly we identify chart patterns. Usually pull back, sometimes it creates an impulsive move, and then you start consolidating, because normally at this period you see that many people will be taking their profits, people who entered earlier, and because of that, price will be consolidating. In most of these cases, you see that you consolidate, sometimes forming what we call chart patterns, because after this, probably we are going to have the next impulsive move, price will consolidate, impulsive move, consolidate. Remember, this is a smaller time frame now. So what we do now, we simply connect and wait for what price to break out. okay, price to break out of this pattern. So in this situation, it will form different types of chart patterns. This could be, this one particularly is known as the flag, right? Sometimes price will consolidate like this, and then when it moves down, you consolidate sometimes to create what we call the symmetrical triangle, right? You see price just slanting inward, maybe just consolidating like that, and then if you just pick your tool and you try to connect, you're going to see that it's going to slant inward both sides, right? So what we want to do is we are waiting for what price to break out. Now if you see, these are two different patterns, but it has the same concept. Price is consolidating because most people who entered at the beginning of this impulsive move are taking their profits, and price, there's no more liquidity to move price. So until when price broke out and many people will be putting in more money, we'll have the next move. So that's how we catch these breakouts. We wait for price to break out and then we catch the moves. You can use it in any time frame, guys. So there are times where price will pull down and then just consolidate like that. Now let me show you the live examples that we get, right? So I usually like to always share, when I share my charts, now we have this H4 time frame. If you look at this drop, pullback, drop, you see that price consolidated within this swing here. So when price consolidated, what happened? Once it got here, what happened? It dropped powerfully. So once it drops, what happened? Now many people have taken their profits around this support, because this is a support zone here that many people will be taking their profits. Now price managed to smuggle and start consolidating. So once price consolidates, and what we do is we wait for price to break out of here. Once price break out, we catch the next move, and now this is the move that we actually target on the H1 time frame. I always like to show you guys, I've showed you guys how the initial trades that we gave in the various channels, in the Telegram channels. I see now that what happened, price consolidated right within this pattern, consolidated. So expecting that what price will break out of it. So what happened at the beginning of the week, we forecasted that price breaking out. When it breaks out of here, we are expecting that it was going to drop. So we had price consolidate here for 1 day, and what happened, finally it still dropped. So you enter based on what they break out, or you might wait for price to come down, come back and retest, right? That times where price will just break down and move powerfully. So you wait for the candlestick to break and move powerfully, or you wait for price to come back and retest. All right, both has advantage and disadvantages, because there are times where you are going to see price move and it might not consolidate. So this is GPU, right? We also had New Zealand US dollar as well, and then we have a pattern. This is it here that we identified yesterday, and if you look at it, we had an uptrending market, right? We had price creating higher highs and higher lows. So if you look at it very well, this is the one that we indicated. Let me show you guys. I always like to show you guys the live chart, the trades that I gave before, so that you should understand what I'm saying. All right, this is it. This is what I gave on the general VIP channel, because I expected that now that price has pulled back, consolidated, created a flag pattern, it broke out of here, it was going to most likely move up, right? So we gave that, and we indicated that price was going to do that. And what happened? Price did just that. This is where we were, right? This is where we were, and after price broke out of it, it came down a little bit, and what happened? It moved up powerfully, because now that price moved impulsively, what happened? Many people take their stops, and price is consolidating, pulling back. The next people enter, the market move impulsively, it consolidates. What happened? The next move, it moved impulsively. So actually I did not take this because I was a little bit busy yesterday, so it's just now that I haven't came back and I saw. So what you do is you just connect, like I told you. Now you can see this is an example of a symmetrical triangle, like the one I just demonstrated, right? See that price, after this strong impulsive move, it consolidated, right? And what happened? We rejected twice, and you see it here, 1 2 3 4. Price are rejected like 4 times. And what happened after a breakout? Look at what happened. Price moved powerfully, and right now price is pulling back to a demand zone here. And now there are situations where price will pull back like this, right? It might pull back like this. It does this, it does this, it does this. When it comes and tap to this demand zone, you go up, right? And in some of this situation, what I will usually do is I will connect like this. I might drop further to maybe smaller time frames. Let me just say like the 5 minutes in this situation, because we are in the smaller time frame. Remember, these things work for all time frames, guys. So you don't be moved by one particular time frame and then I just wait for price to come, maybe consolidate. If it creates equal highs like that, right, what I would usually do is I would just connect like that and then wait for price to break out of it. When price break and close above, right, what I do is that I'll take my trade then, right? I'll just take my trade. Maybe sometimes you see price will go come back retest, and you see it takes the next impulsive move. That is how you can do a trend following, and you catch very good trading opportunities as long as the market is trending. So a quick recap: you go to the H4 time frame, you look at the overall trend of the market, and now you see that we have our price creating higher highs and higher lows. You drop to smaller time frames. If you're a day trader, you look for patterns. All right, sometimes they might not be too visible in the bigger time frame. Like for instance, this pattern here, if you see that it squeezes too much, right, what you do, you drop further to smaller time frame, the 30-minute or the 15 minutes, and then you see, now you can see it clearer, or you drop it further again, right, so that you can see it clearer. Right now you can see it clearer, so you wait, you connect and wait for the breakout, and you cash your moves, and that's how you keep on riding the market impulsive moves. So when you're cashing impulsive moves, it's good because by then the market is not exhaustive. So note that you are not buying when the market's already impulse like this, because most time markets, most people are taking their profits, and price will be pulling back and can easily hit your stop loss. So with this, your win rate can really increase if you learn to enter when price has already pulled back, all right, to catch those impulsive moves. So that is what I have for you guys. If you find the video helpful, please encourage me. Also encourage me by giving me a thumbs up. Click on the thumbs up button. Simply just drop a comment below and let's know what are your thoughts. And also make sure you join our Telegram channel. The link is in the video's description below, and see you in the next video.